The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman. Good to be back. And I just did a Tom show. He's on his way to Las Vegas for the money show there. And I did, excuse me, just get this frog out the throat. I did his Money Masters show just a moment ago. Now it is the Tiger Technicians Hour. Dow's down 79 at 17,002. The S&P's down 6 at 1987. The comp index is down 12 at 4784. You've got gold at this particular point up 11 at 1176. Silver is up. And you've got the dollar is down at 94.33. That 94.40s area is really important to hold, and it's slipping through it. Silver is up 20 cents at 16.11. You got this is going to be very interesting. High-grade copper is at 2.5. High-grade copper hasn't really done very much. Now, bonds, you've got bonds up 1 and 8/30 seconds, filling in. If it goes into this candle, the wick of the candle of October the 2nd, if it can go into the, right there, 159 and 24/30 seconds, it's at 159 and 3/30 seconds right now. If it can even touch that area, there's a chance that it'll hit this downtrend line, and then within 2 days or so, it might take out the 160 and 20/30 second high. If it does that, this market, the stock market, could be vulnerable for about another a session or two. Most importantly is this is a little consolidation that I've been expecting for a while. In terms of, if you look at the Dow chart, this is leg D all the way to the doji of yesterday. And I'd say that it could be a pullback here. The support is at 17,030s to 16,960s. Today's low is 16,978. And the resistance is up at 17,130. So what's going to be very important about this is the 16,890s is the 9-period exponential moving average, but the MACD is holding very well, and the stochastic still at 95%. That should, in fact, hold. That should be good for this particular phase. And when I'm saying this particular phase, you see this dashed arched line here, like you had an arch over there. This is the second, the larger H that goes to a larger M formation, being challenged by the cup, the U formation, and this U formation here that says we could go until the 16th. Today's the 14th, 15th, 16th. So until Friday. And there could be a pop to the upside. And the 200-period moving average right here at 17,284 is really like a magnet. So if it becomes a repellent, you will see the MACD start to pull back sharply, and the stochastic will drop into the 85% area. That would take a lot. That would take about another 100 points down. I'm saying it's impossible because in peak D, and let me just emphasize a couple of things here. I'm going back to bonds in a minute, but at peak D, look, the SPY hasn't quite made D at 202.90. So it's still got a little work to do, but fading here would be not a good thing. If you look at the IWM, it's gone. It's way weaker. It's only gone to a B, but it's failing. So it says the support in the IWM at 113.40 right now, down 58, says in the 120, if I can just pick it up over here, where did it go? 120-minute chart. Hey, there it is. 120-minute chart says I'm right now sitting on the 200-period exponential moving average support, and that support comes in at about 113.30, and the IWM Russell 2000 ETF is trading at 113.46, down 54 cents. So this is a very important moment, but it's been a very good move, and now you're getting that sine wave move, which takes you from the cup to the arch. Look, here's the arch, and we'll see if it's able to start another cup formation. I think it is. My thinking here is it is. So we'll know soon enough if I'm right or if I'm wrong. And most importantly is that you've got, I can't even remember, did I do this? I did this when I did Tom's show. Let me do it again. So my Dow Quartet, made up of GE, I call it my Dow Quartet Index, only 4 stocks. GE, just pulling back from peak E, but with a very strong technicals, it's at 27.66, down 21 cents. And it has 27.34 as 9-period exponential moving average support. IBM is down. It's up. Now it's up. It's up 10 cents at 149.72. The daily is a much better chart than the weekly. The weekly chart has gone to a new leg A. Remember that took out that low there. This is a brand new move. So that's an A, and it went to a trough E. So there could be a bit more of a bounce. Weekly and monthly charts are not really looking that great. But look at Triple M. Look at Triple M. Typed in the wrong place. Put it over here. Triple M, that's 3M company, multinational, conglomerate, down to 7 cents at 149.04. A weekly chart, technicals are really improving a lot for a bounce, still a bounce, because the monthly chart says, watch out, you're still in this consolidation phase. Technicals are still very poor. Peak D in the 120-minute chart. So yeah, you can have a pullback here, a short-term daily and 120-minute chart says sideways to slightly down, maybe into Thursday. Into early Friday. So we're looking at UTX. G is my bellwether Dow stock and my short term, and UTX is more intermediate term. And that intermediate term says a lousy looking chart, but the daily is actually acting very, very well and should go to a C to test that dashed line. Is down 31 cents at 93.97. It should get to the 96.40s. I think it should do it within another 3 to 4 sessions. So there's a peak D as well in the 120-minute chart. If either of these breaks a point lower than where it is they're on right now, the last two, that is, include IBM. IBM, Triple M, and UTX push $1 lower. That will impact the charts, and you will then see quite a bit more downside activity in the overall markets and including the S&P. So what am I forgetting here? I did that. I think I just did the IWM, the QQQ. The Qs are trading in a very narrow trading band. Look, they're down 29 cents at 105.81. Peak D in the 120-minute chart, kind of a mix of sideways. Really, the arch pattern is predominant now. We've got a second arch pattern unfolding. But what it is saying is that the technicals have improved enough to suggest that if by the end of the day, instead of being down exactly where we are, down 90 in the Dow, down 7 in the S&P, we come back to just minus 30 to minus 40 in the Dow, or even better at the close, and the S&P can get to minus 3 or so, or minus 2, what that would say is that there's enough strength in the mix of the QQQ series to at least contain the price. It doesn't say it's going to break to the upside to the 109s. It's at 105.74 right now. And it doesn't say it's going to break to the 103s or low. It just says maybe I'm stuck here for just a little longer. And what's important is if we look at Apple, Apple is also just stuck. It's making this arch formation. The arch formation could become devastating if Apple from 110 starts to trade in the next 5 days. Suddenly you see it at 106 to 105. That really will impact the NASDAQ a lot. But as it stands right now, it could just be stuck in this range a little longer. Now, I didn't do anything with the IBB when I did Money Master show, Tom's show just now. So I'll do it now. You see what I'm looking at here? It's up 2.84. The IBB, this is the NASDAQ iShares Biotech ETF. Now, yesterday when I was on, I was thinking that there was a greater chance that we could worm our way somehow or other towards the teens, 313 maybe, with a very strong resistance starting in the 318 area when I was asked about it. And I did not say buy right now. I was asked about it. Should I be shorting right now? I mentioned the BIS, which is 200% short the IBB, because I thought there was enough strength. And then I looked and I said, oh, look at this. I've got a peak, A, B, C, and a D in the 120-minute chart. So maybe we could pull back a little bit, but I still didn't think that you'd be down 10 points in the IBB. That shows the vulnerability here when one or two stocks within a sector get pummeled. Before, what you'd see is, big deal, let's buy it. Now you're starting to see everything get sold off. And that's what happened yesterday. I did not anticipate that. Therefore, I have to take into consideration this arch formation, something very serious. But at the same time, I am seeing some strength in the IBB, enough to say I would add to our short position from opening call subscribers. I would much rather add higher up, take a chance of just waiting patiently for some intraday big spike to the upside, than to start a short here when the risk is that the IBB has these quick pops to the upside. The downside, you can see, the downside starting to stall. And while it's stalling, my bias has been to think that it's in a trading range, and from this lower range in the under 298 to 280, I don't know if it'll go to 284, 85 in this move now. I think there'll be a rally. I think there'll be a pop to the upside. That's what I'm thinking. So miss that. But what's really important is if you look at the weekly chart of the IBB, right now it's testing this very important trend line support. And if it closes on Friday, if the IBB closes under 297, that really is suggesting that the weakness that I've called a hat trick top in the monthly, weekly, and daily is starting to accelerate to the downside. It cannot get traction. And this is a very important index. When I go to talk at any particular place and I say how many people here have the biotechs, just a lot of people who have any stocks have included the biotechs. So it is important. I've been warning for the whole year. Be careful of the biotechs. I think I'm getting a hat trick top. And now I'm pretty convinced that we've got a hat trick top. What does that mean in the Chapman wave? It means that I was anticipating that the monthly chart was about to make a serious top. But the only way you can get that is if coincidentally you've got the lettering in the Chapman wave of the weekly that says the next peak could be a peak of consequence. And then what you do is you start off with the daily chart. And the daily chart says, we got that peak D doji at 400.79 on the 20th of July. It says, stochastic could fail, could make that arch pattern that just remains high over the 80% line for just a short period, and then bam, it goes under it. And the stochastic, the MACD could be turning down. The on-balance volume of the blue line was already turning down. The RSI, the relative strength, was already way lower than it was way back when it made the other peaks back in somewhere in late June, early July. So my thinking of my thinking then was to be able to get a short position and try to hold it as long as possible. And that's kind of what we've done. So we're trying to add to it now, and occasionally we'll do the BIS and occasionally even a BIB for a quick trade to the pop to the upside. But when the tide changes, forget about going long. If it's going to the downside, your trend has to be to the downside if the tide is going out in the longer term aspect. So I'll be back. Basil Chapman, Dow's down 100.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, we're back. So what I thought I'd do, I had a couple of questions, and let me go through this here. So I go back to the IBB. IBB has 299.87 support in the chart that I'm showing right now, which has the Chapman Wave projections and support and resistance levels. The right here, and that's the 5-minute. We don't need the 5-minute now. I want the 10-minute, and the 10-minute shows 397 is support and 303.44 is resistance, and 120 says anywhere bounced to 311 to 312 area. That should be resistance as well. So it's showing more to the upside in terms of resistance than to the downside as support, but a break below 300 would say 297 to 294 is support, and then you go all the way back to the 285 level. So the bias right now is that the bigger trend, the larger trend, both in the monthly and the weekly, is to the downside. The upside could have a little bit more of a bounce. We'll see. It's up to 38. Now let's go to something like I was showing the bonds earlier on. This is going to be very important because if I go to the TLT, it's almost filled the gap from that gap down from the second to the fifth. The second, the low was 124.18, and today's high is 124.16. So it's trying to fill that gap. But it's got that 200-period moving average of 124.71. That's really, if it can get anywhere up there, then that says that bonds can in fact go a little higher. But I'm still looking at bonds more as a trading range. Now, what I'd like to do is I'm just for the moment going to get out of this, and I want to show you something I found very interesting. Close workspace, yes, save. Go to the other one, which will be the LT. Here we go, reset, long-term charts, mirror, and here we go. This is the chart of the triple yield. The triple yield 30-year, the white is the 30-year. The goldy brown color is the 10-year T-note yield, and this is the 5-year note T-year. This is in a trough D. This is in a trough D. This is in a trough A, B, only a B. So the white one says that arch formation is going to be very interesting because trading at 28.60 down 37, that's 2.8%, says it's very clear, and I drew this line in a long time ago, and it says that a close above 30.92, the high of the week of the 18th of September, would be a change and tell us that the bonds are going to actually start to rise. Start to rise. No, why am I saying it backwards? The yield is going to rise and bonds will come down. That's what it's saying. And most importantly, what we're looking at here is that the trading range remains, and this bar says be careful because 27.49 is quite an important support. If that goes, there should be a test of the low that was made back in the week of August the 28th of 26.25. So the bias now is to say that yields, and I've said this for a while, are just stuck in a range. I think that they're stuck in a range. That's what the chart seems to be saying. And even though there's a little bit more weight to the downside in the 10-year and certainly in the 5-year, but that 30-year seems to be range bound. And the range really says I'm stuck between 30 and a quarter and 28 to 27.90, somewhere around there, at least for the moment. But have a look at this chart here. Gone. Where did it go? Oh, close. There it is. All of a sudden, at a trough B, you've got this really sharp move in WOOD, the iShares Global Timber and Forestry ETF. You haven't had a slower mover is the HGX, the weekly, both of them are weekly charts, the weekly Philadelphia Housing Sector Index. And look what's happened. It's pulled back. So you could have a little bit of a bounce, but basically from that peak D, you've gone below the trough over here of that cup formation of 223. So this says with a low of 214.39, the weight of evidence says got to be real careful because unless the HGX index goes above 240, it's at 225 right now, down 4, and it's got to do it by next Wednesday or Thursday. It's got to do it real quickly. We're going to probably retest the lows, and that takes us to Toll Brothers, TOL, down sharply in that H that becomes an M pattern, with an F in the monthly peak F. Wow, that's serious stuff. At least I'm calling it F for now. I don't see any reason why I should change that to a B/F. It's an F, and this is a G in the weekly. And if I go to Lennar, another one of the better of the home builders, this is the same thing. It's a better action in the monthly chart because it's got an E and it's still the question if it can maybe go to another higher high. But in the meantime, the weekly chart is saying, hey, this is not so good. And this is with yields so low. So I'm going to try to sum this up in the next segment because we're getting a picture here that is really important, and I want to impart that. I'll do a little politics as well.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, we're back. So what we're looking at here is that I had a question about the EEM and the DEN. The EEM, which is the MSCI, this is the iShares Emerging Market ETF, says, yeah, it's matching very much. This is to me really fascinating. If you look at the monthly chart, and if you're looking at the monthly chart, you will find, let me just type this in here. If you're looking at the monthly chart, you will find that the 200-period exponential moving average has been hit. It's become a little bit of a support, number one. And number two is it looks very much like, let me show you, look at this, look at this, look at this, look at this. There's the copper chart. There's the, let's go to crude oil. There's the crude oil chart. Let's go to, actually, you can go to any of those. So it has that pattern. So I'm suggesting here that on a very short-term basis, this is a very critical moment for the EEM, as it is for many of the commodities. And if the commodities are going to continue rallying, then I don't know what the relationship is, because one is emerging markets, the other is, and the other is, in fact, the area of the commodities, and the way I'm looking at it through the dollar TRCCI, which is the Reuters equal weighted commodity index, look, TRCCI, same kind of chart, gone a little lower than the EEM, has the same fractal. It has the same pattern. And when we are looking at these, the EEM, if it's going to have the relationship, it doesn't have to have an exact integral part made up of commodities. It happens to be emerging markets. But if it has the chart pattern, it says that this is a very important moment. Why? Because if the EEM is able, let me go back to the EEM. This is in the A, B, C, T, I believe. Yeah, D. This is leg E in the commodity index. In the gold index, it is leg C, and we've got most of them in D. The gold itself is in C, and GLD, I believe, has gone from the D. This is still D in the GLD. And it's gone above the 200-period moving average. So my thinking here is on a shorter-term basis, treating it the same as when I was discussing Exxon earlier on. I think there's a trade here, and it's a trade to nibble. You can't get aggressively long, but you can just start a position in EEM at 35.30. I would have a 1-point stop. It should not go below 34.60. If it does, that's not good at all. But if you do that, I would raise the stop immediately if it takes out 36.26, because that starts leg D, and then see if it's able to have a sideways consolidation before the weekly strengthens enough to try to get to the top of this candle right here of the 14th, which is 36.99. So what am I saying? I wouldn't give it a 1 point. I'd give it maybe a 70-cent stop at this particular point, or even less, with the potential to go from 35.30 to about 36.50. That's points, just over a point. So you've got yourself about a 1 to 1.5, maybe 2 risk reward. Okay? And I wouldn't get aggressive because it's been in a major down move, monthly everything. This is the first time, though, that there are signs in the weekly charts of all these commodities that you could maybe get a little bit of a turn. I drew this in a little while ago. I drew this cup formation saying that the 10-minute chart with no technicals other than my notation, the Chapman wave notation, and some trend lines, has, in fact, pulled back, and it should try to get above 1989.25. Oh, now it's at 1989. It should try to do that. Most importantly, on the 10-minute basis, for those of you who are trading, you want to see a decisive, not just a kind of a pop up and then a pullback. You want to push above 1991.50, and it must go to 1992.75, and then turn the this candle. Then you must turn 1990.25 into a base of support, and then it should not break this for the rest of the day. In fact, we should be seeing the lows of the day. If this is going to turn around, we should have seen the lows of the day, and we should now be moving up. And by tomorrow, should be looking better. Let's go to George in New York. George, haven't heard from you in a while. How are you?
Basil, how have you been?
I've been well, thank you. How have you been?
Good. Very good. Good. It's been quiet here. Just eyeing up the oil stocks. I've been, as you know, I've been playing OAS.
Yes.
So I've been going into that and building a small position.
So this is very. I just want to tell folks this is the OIS, right? The Oil States.
OAS.
Oh, OAS, of course.
Oasis
OAS.
Petroleum.
Yeah, I remember now. It's coming back to me. It looks a little bit like the other chart. So it's trading at 11.55.
As well as Whiting, I like too.
I'm sorry, what?
As well as Whiting, WLL.
Oh, I have not even looked at that for ages. I should have had it completely notated because I know I'd done it ages ago. I don't. Oh, this is very interesting. Oh, actually, they have similar patterns.
Yes, correct.
So you'd actually like to look at specifically right now.
Today, I'm sorry, I went off on a tangent. Monster Beverage.
Okay, I'm just typing this in here for my own purposes to have a look at later on. So we're going to look at MNST, Monster Beverages Corporation. Oh man, I used to have this all notated as well. And what a pity! If I never ever lost my notations, I would have notations going back to 1976. I would have just about every chart notated. Let me just see here. So this is an A, B, C, no, C, D. Okay, does the D in the monthly chart, and then it goes A, B, C, D, E, F, G. It goes to a G/B in the monthly chart right now. So tell me what you're thinking.
Okay, well, I am long Monster, and especially now with Coke taking a 16.7% stake in it last year and building their distribution channels now throughout Europe and Asia, thanks to Coke. I'd like to stay long in it, but I'm also not liking the daily or the weekly chart because it looks to me, if I'm correct, that it may be setting up a head and shoulders top, and we'll just need confirmation on that. So what I'm thinking is, to tell you the truth, is stay long, but buy puts on it as well.
Okay, 143.90, 144. So that's an F, and then it goes to a G. Oh, so same thing here in the weekly. Oh, this is very interesting. Now, okay. I know that you like me just to tell it the way it is, whether I like it or I don't like it. And I'm going to say to you,
greatly appreciate it.
In the weekly and the monthly charts, I don't like what I'm seeing at all.
Same here.
Now, it doesn't mean to say that it couldn't pull back and suddenly hold support. But that support is tenuous at best. And let me explain what I'm looking at. I don't want to get into the fundamentals of the whole beverage area, but I am going to just talk about, because I don't know much about the fundamentals of Monster, but I am going to talk about, if you go to a supermarket, something that very few of the politicians on stage, the leading politicians on stage, have ever done. But if you go to a supermarket, you will find that if you want plain, I've been talking about this for about 4 or 5 years now, and now it's totally worse. If you want plain anything, you can't find a plain yogurt, a plain water, whatever it is. Everything's got flavoring. I'm not even sure how these people make money, because they must have so much waste. If their raspberry or whatever it is isn't selling, they stuck with it. So I'm not sure just how this works, but I'm just going to do this for 1 second. I want to slip over to Coke. Now,
well,
Coke.
If I may say, I've been following this company for a very long time, probably since 2008, 2009.
Okay.
What's good about Monster is they compete with Red Bull. They're the energy drink.
So that's
sector.
the energy drink, right?
Right. So this is specifically energy drink. They're in the big box retailers as well as all the small convenience stores. It's, mostly caffeinated drinks, of a sort. And what's interesting about the company is it's a very high grower the last 10 years. Earnings per share the last 10 years have grown. Average compounded is 20.58% a year. And it has a very large cash balance. And its current ratio is 4.76 to 1. So the point is, we're sitting with a liquid company. What it is it's valued at the present point.
Okay, so let me just do this. Coca-Cola, you see, what I like to do is I like to have a concept in my mind, and then I like the verification by the chart formation. So no matter what I think of Coca-Cola in terms of what I just discussed about so many drinks everywhere, if I look at the chart of Coca-Cola and say, hey, this is holding pretty darn well. Now, when I get to Monster, on a shorter term basis, this is a very important moment, because if it closes under the bar of the 9th of September, which has a low of 126.51, then all of a sudden you're vulnerable to that August, not necessarily the low, but you're vulnerable to going towards that low of 115.62. If it does that, it messes up the weekly chart pattern. If it does that, the weekly chart messes up the monthly. So if you're long, I'm going to suggest two things. One is, if you want to use the put positions, you've done this before, and it's worked out well for you, because you know that if you are right, Monster is going to turn around and it's going to tackle close to the all-time high in the 155s, which will more than make up for any put positions that you buy, because the gains will be very, very strong. Right. But I like the idea of the put position because it's going to say to you, you can hold it a little longer because you're going to have some leverage. And you need that because there's a potential for the head and shoulders in the weekly chart to turn into something a little bit more serious if it closes at under 124 at any point, which is only 4 points away, not 4.5 points. It's not a big deal for it to slide that way. But if it does that, then all of a sudden you say, uh-oh, now it's kind of, the upside becomes very limited and the downside is like an open, anything can happen. So I like your strategy. Here's another strategy. You're already in the position. What I would do is, you're in it right now, right?
Yes, I am.
Okay. So what I'm going to suggest is some part of it could have a stop at 125.50. That's just underneath that bar of the ninth.
Okay.
And the other one could have a little bit wider. You could, because you're in this position, if you take something off, then you can allow it to go to, I wouldn't want to go to 115.62, but somewhere, if it goes, I can tell you right now, if it trades into 120, under 123, halfway into the wick of the candle of the 24th, you've got to be careful because it's probably going to go lower and try to test the low.
That may not be a bad idea because I could take off a little. I have enough.
Yeah. So that way you've got the capital to put back. And even if you put it back on the way up, just where you took it off, that's fine because you've got the trend change going up.
Where would you say then the trailing stop should be placed?
So this particular point, I would not, 120, I would say at 125.90, I'd take something off.
Okay. Got it.
And then I think you've got time. I don't think, the way it's looking right now, it doesn't necessarily have to crash or anything like that, but I'm afraid that if it takes out the 125s, it really could go down towards that low. So that's the area where you want to see some support.
And where are you earmarking for a low? Because I'm thinking this could take a big dip into about the 105 area.
I can just tell you this, that if it accelerates down with another red candle like we're seeing next week, and it takes out 122, I don't see how it will be able to stop until it tests the 117, 115 area. If it takes out that, then this is in what I would call a hat trick top. I would not be looking to go long until it really forms a base of time and price.
I see. Okay. And then the 125.90, where is that indicated on your charts? Is that on...
It is just a tad lower than the 126.51 low of the 9th of September.
Okay. Understood. Very good. All right, I appreciate it.
I like your thinking, but we're looking at the chart, and the chart is saying, yep, the monthly could give us a lot of information if at the end of October, it actually is trading right where it is now or 2 points higher. But if it's trading 3 points lower at the end of October, it's saying, it just doesn't have the strength.
Right. Okay, I understand. Because, see, what concerns me is this, because Coke has a decent stake in the company. They bought 16.7% of the stock, as I said. They also did a strategy where they took over Monster Beverages Hanson Natural products, which are the natural fruit juices.
Yes.
In exchange, Coke gave them back their energy segment drinks. So what Coke is doing, if I'm thinking this out correctly on a strategy, is they're departmentalizing where Monster Beverage will be full energy sector. So eventually they just may do a takeout of Monster one Sunday night.
Yeah, that they might do. That's why I'm saying try to hold on your option position maybe is even best because you're in it if they suddenly do the takeout. Hey, good call. Thank you, George.
Basil, thank you again for all your help.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. We're back. Just a real quick question. I had an email about the BKX. Let's go to the XLF. It has the same chart pattern. Actually, doesn't have the BKX doesn't have that horrible 18.52 or August 24th sharp drop. It's just the H pattern that's going to an M pattern. I just don't see anything yet in the XLF, and that's also partly because the yields are coming down. Let's go to Mohammed in Glendale, California. Mohammed, how are you?
Good morning, Basil. How are you doing?
I'm well, thank you.
Good. I was wondering if you could take a look at Pulte Homes, PHM, and see where do you think it's going. It's been a trading range from 17.5 to 21 or so. It's just stuck there, forming a base, it seems like, but it cannot make up its mind.
Well, in a way, it has made up its mind. If you're looking, first of all, the monthly, Pulte Homes, Pulte Group is called, it used to be Pulte Homes, I don't know when they changed the name, Pulte Group Inc., houses, property development, etc. This is a very familiar pattern to those who work with the Chapman wave. It's that flag pattern that gives you a rectangle, and then within the rectangle, there's an attempt in a shorter time frame to get to a peak D. In this case, it's the monthly chart, goes to a peak D, pulls back very sharply from the 24s down to the 14s, has a sharp rally, goes to 23, doesn't take out the high, and then starts the arch formation, that rollover formation. That's number one. The technicals are shocking in the monthly chart. The weekly chart is it's almost like a microcosm. It's almost like a head and shoulders in a sense. And I'm looking at it and I'm saying, wow, at 1887 down 64 cents, there's a real good chance that the 17.90 200-period exponential moving average is going to be tested over the coming few weeks, unless there's something that just it has to have a spectacular pop right into it's 1887. It really has to go into the 21s. If it gets to the 21s, I'll suddenly turn around and say, hey, that's much better action. But right now, even the daily has got the arch formation that goes from an H to an M. So do you have any position at all?
I don't have a position, but I know they're coming up with their earnings next week, I believe. So I'm trying to see if I should get in at these lower prices.
The way it looks like it might disappoint. You know what? If there is good news, sometimes it could pop as much as 2 points, even 3 points. That's a big percentage move. But if it disappoints, that means I don't see a way of getting out of it, even because if you're holding it and it pulls back 2 points, all of a sudden you've got such strong resistance at the 1850 level that it might take a while to get your money back. So I tell you what, let's look at it. I'm going to try to find out when the actual date of the announcement is, and if it's say Tuesday, then on Monday I will look at it and maybe we can look at it as a position play. But in the meantime, I'd stay clear. I'd sacrifice a 2% gain because there could very quickly be a 2% loss. It's just too risky. The weight of evidence is saying it'll have to be spectacular to really spike much higher. And it has done that, but I'd be very cautious about it. I'm just going to say, hold off for now. I don't see anything here as a trade other than if you got in a very small amount. I'd even think of it as an option play. Rather buy a call option, a 20 or 19 call option. I don't know if you use options at all, and that's the best way to do it. And you know exactly how much you could lose, but that way is a defined loss, and definitely you'll have a fantastic gain. But I'm going to say hold off. Monday we'll look at it again and see when the earnings come out. Okay?
Okay, sounds good. Thank you so much, Basil.
Thank you very much. So that's folks like the HGX index that I was looking at, the Philadelphia housing. So, okay, before we go to Daryl, that's coming up next. Remember, program all day, just a really great programming. Let me do this. I'm going to say to you, the VIX index, VIX, trading at 1835. If it closes above 1850, this market will see the Dow down 135, S&P down about 8 points. But if it suddenly starts to pull back and goes to 1815 and then under 18 by 3 o'clock, this market could have a really nice bounce. It's just a period to be a little cautious right now. My bias is slightly up, but we have shorts. Thanks for being.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.